trending days are one of the most liquid, scalable, and asymmetric risk-reward opportunities in the market. We can build a career on these days. Because of the risk-reward, they are one of the best ways to trade if you have a small account, and one of the top things you can do to accelerate your growth for any account. You can trade options, equities, futures, even minis on these days and get amazing risk to reward. But how can we identify these days early enough in order to capitalize? There are early signs that can stack the odds in our favor. They help us identify when the probability of this huge risk-reward opportunity is there. You know, why I started caring about trend days was I kind of paid my tuition to the market because I didn't even know what a trending day was at the time. And I made a really costly and honestly now looking back, very avoidable mistake. The market kind of forced me to learn. I was in a trending day. I didn't know it was a trending day, but I was in a trending day. And I thought I was trading mean reversion strategies and, oh, look at that move in one direction. I'm going to fade that move and I'm going to really catch it when it turns. And it would start to turn, but then all of a sudden this just wave of momentum would come right against me. That feeling that happened over and over in that one day left me at the end of the day thinking, I never want to feel this way again. So the market forced me to learn this lesson. And now it's turned it into a huge opportunity for me in my trading and a huge opportunity for our desk as a whole.
Thanks, Jeff. Garrett here. I'm a trader on the New York City desk. And in this course, you're going to learn 3 techniques to capture a market trend day. In the end, you're going to come away with actionable methods, actual tools that will help you build edge on these days. The information we're sharing here is the result of trading experience, of course, but also hours of quantitative analysis and tool building. And the result is a very simple process. We're going to lay out this process so that by the end of this course, you'll have the opportunity to incorporate this knowledge and these tools into your own repertoire. So I'm fired up to talk about this subject because this is an area of the market that I'm particularly passionate about because the opportunities are so big.
And why Garrett's here and why Garrett is running this, and I'm really a participant. I actually have a notepad here so I can take some notes, but on our desk, Garrett's the guy that studies these the most. He's the trader that every single trend day is looking at, how do I predict that earlier? How do I get in earlier? How do I manage my risk better? So if anybody was going to do this presentation on our desk, it's Garrett. So I'm looking forward to getting into it as well. Let's jump in.
We're going to bring to life these 3 trend day techniques with real historical examples.
So what you mean by that is we're going to learn the technique and then see how it's applied.
Yes.
Okay.
Yeah, exactly. But first, we want to understand what a trend day is, right? Like, why do these days happen? What are they? Because there are structural and fundamental reasons why these days are so special. Like, they're not accidents. And so that's very important in terms of identifying them. So Linda Raschke, the famous market wizard, she's defined a trend day. And I think that her definition is actually extremely interesting because it incorporates a number of different components, right? When most of us think of a trend day, and I get asked this all the time, what is a trend day? We think of something that opens at the lows and closes at the highs, or opens at the highs and closes at the lows, and maybe that's the extent of our thinking of a trend day, but there's more to it. And as she points out, a trend day occurs where there's an expansion in the daily range, right? So we want to look for range expansion. We want to look for a big move, right? That's what's going to give us that great risk reward. And of course, the open and the close are in opposite extremes. The first half hour of trading often comprises less than 10% of the day's total range.
Hold on. So you're telling me the first 30 minutes of a trend day often is less than 10% of the entire move we can expect on the day?
Yeah, not every time, but that happens a lot.
That just means that if we can identify it in the first 30 minutes, we can catch 90% of the move without having to predict it.
And you can get incredible risk reward just trading against the low a day or the high a day in that case if you catch it early on. So there's usually very little intraday price retracement, and that's just another way of saying there's low variance, right? Like if something opens at the lows, trades to the highs, trades all the way back to the lows, trades to the highs, all the way back to lows, and closes at the highs, that's not a trend day. That's a range. It just happened to open at the low and close at the high. Here's some examples, right? That's beautiful.
Oh, I see exactly what you mean. That first 30-minute range, looking back, I just see that giant downtrend. But then I look at that first 30-minute range and I see how tight that consolidation is relative to the rest of the day's range. But I see what you mean. We have a trend in one direction the entire day.
Yeah, and there are so many opportunities here. And as we go through these charts, and we're going to draw on these examples later in this course and talk about the specifics and even some ways to trade them. But, just notice some of the really easy things about these charts is that they spend one side of VWAP the entire day, right? Like the pullbacks are very shallow.
Where's VWAP on your chart?
It's the purple
Okay.
line. So I have a cursor here.
Yep. And
I
VWAP,
can't
meaning
really see it.
the volume weighted average price. So that tells us what the average price is of all the volume traded, and it builds out through the day.
Yes.
Okay.
And here's a downtrend day. I actually traded this day.
So when we're looking at this, if the sellers are more prevalent, the selling pressure is just so extreme that it can ultimately lead to a trending day, we'll see price stay below VWAP all day. Or if the buyers are there and they're driving the price action higher, we'll see price stay above VWAP just all day. Okay.
Yeah, that's a hallmark of these trend days, right? And even here, you'll see it dip below for a little bit in the morning and then right back above, right? And so if you're looking for it to continue to be a trend day, like if you have that thesis in your mind, you can key in on those spots because you kind of know what it should be doing there if it's going to continue to be a trend day.
But as we look at these charts, how do you even get to the point where you're identifying, okay, this is the potential of a trend day? Because, it's one thing to see it on the chart, but there has to be more than that.
Yeah. It's all about the context,
Okay.
right? So and we'll talk about that, but there are some things that we can do to really key in on the context that just give us a backdrop. They tell us about the character of the day right away so that we don't have to just depend on, gambling with, trades, hoping it's a trend day, right? That's not what we're trying to do.
And when you say character of the day, do you mean the participants that are involved?
Yeah, so that's huge, right? Remember when I said these days are different? There's structural, fundamental reasons why they're different. Well, one of the big reasons that they're different is that there are higher time frame participants on these days. And
so a higher time frame, we trade intraday equities, right? For the most part, sometimes we'll put on a swing position, but for the most part, we're trading intraday. Even if all the intraday participants kind of get moving in one direction and we can get a really nice move off of that, those are not the participants you're talking about on trending days.
Right. We're talking about big money getting involved on these days.
Like hedge funds, mutual funds, index funds, like what type of participants?
Yes. All of them.
Okay.
And look, these days can happen because of technical breakouts. They can happen because of catalysts, right? There's a number of different ways that they can happen. But the evidence of them as the day develops is always the same. And it's because these participants are in the market. And so these participants might actually be, their objective might be to execute over the course of a week. And this just might be day one. So they don't care about, waiting for that little pullback or, waiting for it to trade all the way back down to the lows before they buy. They're not looking for value here, right? They're probably putting on algos that are either buying at VWAP or trying to get close to VWAP as possible and that kind of stuff. And
they're just participants. When you say higher time frame, they're just participants that are making their decisions on a different time frame than us.
Yes.
Okay, so they're the cruise ship that's driving, where we're the little speedboat driving around.
Yeah, that's a great way of putting it.
Okay.
Yeah. And so 10 to 20% of days are trend days, right? So that 1 in 5, 1 in 10, okay?
All right, so if there are 252 roughly trading days a year, you're talking about between 25 to 50 trend days. Well, now thinking about it, that's actually a lot of trend days if you can really take advantage of them.
Yeah, absolutely. And look, this is why we have to have a system for identifying the context. This is why it's so important, because if you want to crush these days, you have to reserve your bullets for when everything is aligning. And if you want to avoid these days because you typically trade mean reversion, you got to know when they're happening, or else, like as you pointed out earlier, it's very easy to get run over on these days because they're so different. It doesn't matter what kind of trader you are on these days, right? You can scalp the moves, you can play the momentum, you can be a position trader holding for bigger moves. The context is what's key here, right? And then you can apply that to whatever your style is, and it will work on these days. So
well, on a day like this, my style is just I want to buy as early as I can and sell as late as I can. Or if we're doing it the other way, if it's a short, I want to short as quickly as I can, and I want to cover as late into the day as I possibly can, right?
Yeah,
how do I just do that?
That's a great strategy, and we'll show that. We'll show that at the end. Actually, we'll show some actual trade spots that are good risk reward, intelligent trades to make. But what we're going to start with, what we're uncovering today, is how do we get the green light, right? Like, how do we know when we can just pull the trigger and actually start thinking trend day and start applying all these things and trade it as if it's a trend day? So once we've identified a trend, like, the trading becomes much easier, right? The key is having that system that stacks the probabilities of trend in our favor. So there are 3 techniques that help us do this. Number 1, track the market internals. This is huge, right? This is what is going to give us an idea of whether or not a trend day is even on the table. It's gonna let us know what the probabilities of a trend day are. And so when these are not in our favor, then we're not going to get a trend day. Like, it's very, very important to think about that. It's a very powerful thing. And that's why these market internals are so powerful, right? So these are metrics from the exchanges, and they describe the breadth, the underlying strength, right? It's the vital signs beneath the surface of the market as we're trading, okay? And so we're looking for extremes in these readings. That's what's going to give us the trend day.
Extremes relative to any other day.
Yes.
Okay.
Yes. And so it's important to kind of look at what's normal and then look at what's extreme. And so we'll go over that. And really what we're looking for is to reveal to ourselves, what is the potential of this trend, right? Is this a nothing day where the potential of the trend is 0? Or do we really have something here, and that's going to compel us to continue to look into this idea of a trend day? So here's some basics on market internals, right? So they measure the participation. And by that, I mean, in the overall market, we have many, many stocks, right? Thousands of stocks. And for a move to have follow through, we want high participation. We want all of those stocks to be involved in this up move, right? Because if it's low participation, the move's likely to fail. But if we have high participation, it's likely to follow through. And so that's huge information, because what we're looking for in a trend day is that follow through. And so trend days don't happen without participation, right? And that's
and
like,
by participation, you don't mean just it showing up on volume, right? Because we can look at a volume chart and see more volume on a day, but that's not the type of participation that you're talking about.
Exactly. And actually that's a really interesting point, in my opinion, just because when you're trading the indexes like SPY or QQQ, the RVol, the relative volume is kind of watered down. Like, we're not going to see the 5 to 10 times volume in those indexes as we are when we're going to be trading like an individual name on earnings, for example.
Yeah, so like an in-place stock, I may look for a minimum of 3 RVol, but I might not ever really get that in if I'm trading SPY or Q or IWM. It just might not happen. So how do I even figure out participation? How do I even gauge that?
Yeah. And so the internals are what's telling me whether the market is in play.
Okay.
So there are 3 major internals that we track, right? And there's a hierarchy to these, and that's actually a good way to think about it. And so we'll go over that. So the Vold ratio is number 1. This is the most powerful contextual tool, and it's the slowest to turn, right? So we're taking the net volume of the up stocks divided by the net volume of the down stock. So it's the ratio of the volume flowing into the stocks that are green to the ratio of volume flowing into the stocks that are red. And we look at this first for our context, because when this number is really extreme, it's telling us something. And if there's a dramatic turn in the market, it's going to be slower than the others to turn. So we think of this as our foundation, and it's kind of like the first check. Like, we want to see what the Vold ratio is in order to confirm whether the market's in play and whether we have extreme strength or extreme weakness. And then we look to the others.
So if these participants, to go back to that participation idea, if the participants are not present driving us in a trend in one direction or another, we'll see some stocks up on the day, other stocks down on the day. We'll see an even-ish number. Maybe it moves around through the day, but what you're saying is we won't have those higher time frame participants, and we'll really need to do a lot more of the intraday trading and trading the stocks in play that we typically look for in that circumstance. Yes. Okay.
Absolutely. And I think, like, for me, when I see one of those days, like if the Vold ratio is, and we'll talk about it in a second, what the neutral readings are and what the extreme readings are, but if it's neutral, like I'm going to gravitate to those stocks in play, and I'm not going to worry too much about the market. But if you trade the market every day, one of the things that might be going through your mind is that, okay, like levels tend to hold on these days. In other words, like if we're inside of yesterday's range and we trade up to yesterday's high and the Vold is very neutral, it's a very good chance that we might reverse off that level. Like the chance of a breakout is a lot lower.
So it's really telling you what the underlying strength or weakness in the market might be, or if there is any underlying strength or weakness in the market.
If there's a strong directional bias skew to the day that's created by these higher time frame participants, right? Because they're the ones doing all the volume. So then we look at the advanced decline. This is the most dynamic of the three. It's medium in terms of speed, so it kind of ties everything together. Okay, and this is the number of green stocks minus the total number of red stocks. So the difference between the stocks that are up on the day and the stocks that are down on the day. And with this, we want to look for patterns. There are very distinct patterns in the advanced decline that signal a trend day or signal mean reversion. Okay, and we'll get into what those patterns are in a second. The third one is the tick, and this is the most immediate of the three, meaning that it's telling us what's happening right now. Right this moment, the tick is describing how the market is reacting. So like if you're looking at how something's reacting off of a low or a high or a pivot, you look at the tick and you're going to get information about that. And it's the fastest to turn, right? So if everything is really strong and we come into a level and then at that level everything gets extremely weak and we sell off, it's going to show up in the tick first. The tick's going to be going negative, and that's going to drag the advanced decline down, and then eventually the Vold will come off, right? And so this is the hierarchy that I'm talking about. Right?
And these three are available pretty much on any platform, right? Because they're measured from the exchange. So most trading platforms should have this, right?
Yeah.
Okay.
Yeah, actually.
And it might look, the symbol might be a little different, I'm guessing, but at least they're there, so you can find them pretty easily.
Yep. And when I trade the Qs, I look at the NASDAQ ones, and you can also look at the NYSE ones. Most people probably look at the NYSE ones, but and this is just to represent the hierarchy. So the Vold is the foundation, right? And the tick is kind of out there navigating us through the market, right? And the advanced decline ties them together. So let's talk about the Vold first, right? We'll go down the line and we'll give you some examples. Extremes matter, right? So this is a situation where we're not looking at subtle changes. We're not looking like, oh, the Vold ticked down, let's sell the market, right? We just want to look at that number. What is it? Is it extreme? Is it telling me that there's extreme strength or extreme weakness? It's very black or white, right? And so generally a ratio of greater than 3-to-1 opens us to the potential of trend. 5-to-1 is undeniable. And sometimes, 2.5, will get us a trend. But I would say 3-to-1, anything below 3, you really want to question, like, are we really getting a trend here?
So 3-to-1 would mean there's 3 times more volume flowing into up stocks than down stocks.
Absolutely.
Or 3 times more volume flowing into down stocks than up stocks.
Yeah. So the way we can say that is like, the volt is a reading of like 5 to the downside. It means there's 5 times as much volume flowing into the down stocks as up stocks, or if it's 4 to the upside, it's 4 times as much flowing into the up stocks.
So that would tell us that there's broad participation. There's
Yes.
just buying pressure that's extreme, or selling pressure that's extreme across the entire, the entire market.
Yeah.
Okay.
Yeah. And a good way to think about it is that not every single volt reading of above 3 is a trend day, but pretty much every single trend day has a volt reading above 3. So if you think about that, what we're doing is we're opening up the possibility now.
So
right?
we're building that foundational base. If we understand it's 3, okay, now we can look a little deeper. Now we can see if there's more. But if it's less than 3, we probably don't have a whole lot to pay attention to.
It's
Okay.
easy. You just kind of go do something else.
Okay.
Yeah. So here's some examples, and this is a 5-day, 15-minute candle chart, and the trend day that we're talking about is on the right. And I mean, you should, like, Jeff, do you see the kind of like, it's like what doesn't
It's extreme.
belong?
I mean, it looks different than any other day. There's a day a couple days previously where I can see the vol ratio, the blue bars at the bottom of the chart. I can see that building through the day. But from the very beginning of the day you're talking about, I see the extreme, and it just continues to build from there as well. It's almost like almost pegged in that side where it's just like an extreme reading very early on, and then it just continues to remain extreme.
Yes. And because of that, this is the kind of day where it is absolutely 100% possible to identify this early in the day. Like talking like within the first 20, 30 minutes, you're taking out your trend day playbook and you're trading it, however you want to do it.
Okay, cool. So we get the vol ratio +5, +6, +3 even, and I can just either buy the break of the first 30-minute range and then I'll sell at the end of the day, or I can short the break of the first 30-minute low and cover at the end of the day, right? We're good.
Well, those are great trade ideas, but we need to have more checks in our favor. Right?
Okay.
There's a lot more that we can do to stack the odds so that we're going to do even better on these days.
Okay.
All right. So here's another example just to show, and I think it's important to show a few just to see how,
That's really extreme.
the look that we're looking for, right?
Yep.
It's kind of the same every time, right? Like that's a very, very extreme one, +10. I traded this day actually, and it was a very, very clear trend day. Like all the signals were pointing to a trend on this day. And here's one to the downside, right? Another extreme one, -5, very clean trend day. I traded this one as well. And
I see that trend day. Yeah, I'm looking at that.
Yeah, you saw that one? Yeah.
I'm looking at that and I'm going, interesting, but I see a trend day to the upside
Right.
2 days before.
Yeah.
So that's really interesting. So I see that, and I can see what a powerful tool this could be. If we could identify that very early in the day and it just stays there, I can see how this might be a really effective way of kind of looking at the potential of a trend. So, okay.
Yeah, great. So the advanced decline, right? This is now that we have our extreme bold reading, we want to check the advanced decline, because if anything is going to unconfirm, is that the word? Is that a word? Unconfirm? Unconfirm the bold, it's going to be the advanced decline. The difference between the number of up stocks and number of down stocks, right? We went over that. And so we're looking for the strongest pattern with the advanced decline for trend days is when it's pinned to extremes. And so positive 2,000 or negative 2,000 the entire day.
Pinned to the extreme. So the difference between the number of up stocks and the number of down stocks. So that gives us our number. So
Yeah.
if it's plus 2,000, there are 2,000 more up stocks on the day.
Right. So that means that maybe there's only 250 stocks that are down on the day, and there's like
2,250 that are up on the day. Okay.
Exactly. And so if it's like that the entire day, like we're good, right? We are getting more confident about this day. And so we'll show you what it looks like. So right there.
Oh, that's extreme.
Yeah, and like see how different it looks than all these other days? Like all the
Yeah,
other
I
days
see
like
the
we're
up and the down, even in the first 30 minutes, which is really what we're looking at. You can see, I can see the difference between extreme readings and any other readings. Even that trend day to the downside, it looks like a couple of days before it started down there and it never really kind of got up. It sort of stayed pinned and then went lower. That example you're talking about is obviously the most extreme one of it. It's completely pinned. It's not going anywhere.
Yeah. Yeah.
Okay.
And there's a subtle difference between this trend day that we're studying and the other trend day that you're pointing out to the left, which is we actually traded higher in the morning on that other day. And then we rolled over.
But the advanced decline line never really like jumped up.
Yeah. So that was actually a great indication of a weekday where a rally shouldn't be trusted.
Okay.
And that kind of opens up a whole other trade where we rally in the morning, but maybe signs are showing that we're weak and maybe we'll roll over. And we actually
so
close
that's
at the
you
low.
using these indicators to identify what type of day it is, even if it's not a pure trending day.
Yes.
Okay.
Yeah. And what we're pointing out today mainly is just the hallmarks of an extremely strong or extremely weak trend day.
Okay.
Because these signs are so simple. So here's another one, right? It barely looks like I changed the chart because it's the same pattern, right? Right there.
Yep.
It's like
it's absolutely
obvious.
Extreme. Wow.
And to the downside, it's like you
Wow.
flip it over and it's the same thing, right? And all right, this is a good example of when it doesn't happen. This day on the left. Okay.
Oh, I see. So it starts out and it looks like it might be extreme, but I see how quickly that advanced decline line starts to correct. It starts to go towards that middle. Okay. So that would mean that even though we started weak,
right, both days we had a gap down.
both days we had a gap down.
And the
We
advanced
started
decline
weak.
opened really weak both days, but on the left, the advanced decline actually started to unravel at the open and mean revert back to zero. And so when it rallies hard off the open like that, that's what I mean about it's a dynamic indicator. Like we might have opened on that day with a really negative vold reading. And this is why we then go look at the advanced decline, because if the market's going to mean revert, it's going to show up right away in that advanced decline.
And I noticed something, and apologies for interjecting, but I noticed something here where you're using 15-minute charts. Is there any benefit to 15-minute versus 5-minute versus, say, 1 minute or 2 minute? Or is it really, we're just looking at the extremes here?
No, it's going to be the same number no matter what time frame you're looking at.
Okay.
And so I'm just doing this because I thought it made sense to look at 5 days with a 15-minute chart.
Gotcha. Okay.
All right, the tick. All right, and this is, and we'll say it again, the difference between the number of stocks trading on an uptick and the number of stocks trading on a downtick.
So that means every minute, every second, every tick?
Every tick.
Every tick.
And
okay.
so you're going to look at minute bars or 5-minute bars, and it's going to have an open and close just like price does. But you're looking at every tick of the market. And so what that's telling you is like right at this moment, how many more stocks just upticked than downticked? And so when you have persistent buying, you're going to have consistent ticks in the market where way more stocks uptick than downtick. And so sometimes, and on trend days, the tick is going to stay above zero for long periods of time and generally stay above zero for the entire day for an uptrend day.
So essentially, everything will be an uptick, or more stocks will always be upticking than downticking if we're seeing that, or probably the same thing on the downside. Just the number of stocks or the number of the way that the ticks are trading would be more to the extreme on the negative side and less to the zero line or kind of even above it, because you would just have that consistent participation in one direction.
Yeah.
Okay.
And one way to quantify that and to measure it is by using the cumulative tick. Okay, so this is an indicator that accumulates each tick bar and builds it out. And what I mean by that is like if the tick body of the candle is above zero, we're going to add that to the cumulative tick line. And if it's above zero again, we're going to add it to the cumulative tick line. And so that cumulative tick line is going to trend in the direction of the tick. And so we'll show you that in a second. And another thing that we want to look for are just 1,000 or negative 1,000 ticks, right? So on a trend day, we want to see a consistent strength of 1,000 ticks or consistent weakness of negative 1,000 ticks on the extremes.
Now, I know Dr. Steenbarger talks about this a lot, and we talk a lot about it on the desk. And just one observation that I've noticed through trading and through watching the tick in particular is if it's not a trending day, if there aren't those other participants in the market, if there isn't that big participation in one direction or another, where will we typically see the ticks kind of contained in? Will it be like plus minus 1,000? Maybe our range gets compressed and it's plus or minus, 800 or something like that? Like where would we typically see that range?
Yeah, probably between 800, 700, 600, somewhere in there, right? It's like, 800 is a good measure. You're probably not going to see a lot of 1,000 ticks. You might see one, right? There's usually, on a normal day, you might see one, right? And if you just see one, that's no reason to jump out of your seat and think, the market's crashing, right? Or the market, or we're rallying, okay? A lot of times on days where nothing's happening and we're in a range and we're within yesterday's range and the market's not in play, those extreme ticks might be fades, right? That's just sort of an outlier where, then we come back in, right? But what we see on a trend day are consistent 1,000 ticks throughout the day.
So it'll look very different than any other day.
Yeah.
So now we have 3 factors that could contribute to us observing and identifying a trend day earlier. So when we have these 3 in place, now can I put on the risk and just buy and then sell at the end of the day, or short and buy at the end of the day?
Well, you could if you didn't want to have even more edge. So we have even more context to lay out.
Okay.
That's going to make us that much more confident about this trend day.
Okay.
And all of this stuff is really easy as we can see to see in the market, right? And so all of this comes together very quickly. So it's not like we're waiting hours to get all this information. I mean, we're getting it right away, and then we're checking it in the morning. Like at every checkpoint, we're checking it. So, and then the last thing with the tick is that we want to look at the counter tick extremes, right? So if it's an uptrend day and we're getting positive 1,000 ticks, and the down ticks are holding above zero, meaning the ticks are generally holding above zero. That's what we want. We want to look at those counter tick extremes. So when it comes back to zero, we want to see, like, if it dips below zero, does that get bought up right away? And that's the kind of the same thing as saying, I want to see pullbacks get bought, but we're seeing it in the tick. And so that's an important character of a trend day to follow. And so we'll show these right here. And so here's 3 days. And, I hope that you can see, Jeff, how obvious that third day is.
The third day is insane.
Yeah.
I mean, so the blue line, I'm guessing, is the zero line. And then the extreme, it just looks so different than the other 2 days. Not just in the tick reading, that kind of up and down that you've highlighted, but also in that trend. And that's that cumulative tick that you're talking about, I'm guessing.
Yeah. And so when the range of the tick, as you can see, which is mostly below that zero line the entire day, that cumulative tick is then going to trend down. That's what's happening there.
Okay.
And so here's a beautiful trend day where we can see now closer up, because we're just looking at the day, how the tick just cleanly trades below that zero line, which is that white line, white gray line that goes across, and how the cumulative tick is just trending beautifully there, right? And so that's just information. Like every single one of those pullbacks, we can say to ourselves, yep, the tick's still below zero. It's still below zero, right? So here's another one. We've looked at this day, but this is just to reinforce this pattern.
I see little spots where it pops above that zero line or below that zero line. Are those counter tick opportunities that you were talking about?
Yeah, exactly.
Okay.
So here's a great one. And I think this demonstrates it well. right? So we're below zero. The tick is below zero all day until that moment that we're pointing out there, where the tick finally gets above zero, right? And price rallies, I mean, a little bit, but we're still below VWAP, right? And so there's nothing alarming going on, except that we're able to see what the buyers are finally able to do, which is not much, right? And so when that tick fails to hold above zero, we can be much more confident that we just saw what the buyers were able to do. And we got that out of the way. And so that actually becomes a great area to look for a trade. It's a great area of interest. If everything else is aligning with the price action and everything in the way that you trade. So here's another one, right? We are generally trending above zero, as we can see in the cumulative tick, but there are a few moments where the tick trades below zero. And so what we're looking for in these moments, again, is, okay, price is pulling in, the tick is trading below zero, but I'm looking for this to get bought. And so on a trend day, as soon as that selling is over, and as soon as the tick starts trending above zero again, as soon as you can see it on the tape as well, we get bought from that pullback, that should be it. Like, the selling should be over. And so again, these are really good areas of interest when you're watching the tick.
So now I can see those extreme readings, and let's say it's 9:50, 20 minutes after the open, and I see those three extreme readings. I'm just going to put the risk on and see what happens, unless there's something else I really should be paying attention to as well that could help me with my conviction, help me make sure I have a high probability trade, because I know that this is a big opportunity, and especially if I see those internals showing us what we need to see for this, I can recognize this is a really, really big trading opportunity. But is there something else I should be aware of? Because, sometimes I can put the risk on, and if I'm really going to go for it and really grow my account, really make the most of the opportunity, I want to make sure I'm not missing something here.
Yeah, no, absolutely. And there is, because like I said, it's all about context. Okay. So we need to stack all of those cards in our favor. The more, the better, right? So we can track the market ETFs. Right? This is an extremely simple technique to give us some really great context that anyone can do, right? Because we all have access to these ETFs. Okay, so I have an ETF filter, and that's what helps me do it, right? And this is an indicator for the risk on and risk off components of the market. Right. So
if you're a big fund and you're putting on positions, or you're a group of funds that are causing a trending day, you're not just buying, every FANG stock. You're not just buying a kind of random basket of stocks. You're putting on risk, or you're taking off risk. That's what you're saying, and you're doing it across a ton of different components of the market.
Yeah. Okay. And look, like different types of stocks, different sectors they fill different roles in the market, right? There are some industries that these funds will buy when they feel like it's an atmosphere where they should be taking more risk. And there are some sectors and industries that they're going to buy when they feel that they want to take less risk and they want to be more protected. Right. And so that's what we're deciphering here when we're looking at these ETFs when the market opens, is we're getting a feel for the sentiment and the tone for the day, the risk appetite of these participants. So the sectors that are driving the move are what is telling us the story. Okay. So there's two things to look at. There's the offensive industry ETFs, and that's what signals risk-on sentiment. And there's the defensive industry ETFs, which signal risk-off. And then there's the thematic asset class ETFs, which also provide additional tone. Okay, so when we're talking about risk appetite, we're talking about the risk appetite of these participants, all right? And we're going to be tracking these ETFs in a very easy, simple, organized way in order to decipher this.
And this not only might help us understand or confirm if it is a trend day or not, but as I'm hearing this, all I'm thinking is that could add conviction to my trend day trade. If I see the offensive stocks being bought, or really the risk on ETFs being bought, I could expect that trend day to be more powerful to the upside even. Or if I see the defensive ones being bought and the offensive ones being sold, okay, that might be a more powerful trend day lower. Or if I see the thematic participation, that might tell me a little more about who's involved in the trending day. So even if I've already confirmed it with the the kind of indicators we looked at previously, then this can set the tone for what types of trend days we might have. How aggressive I might need to be or want to be, or how my hold periods might look as well.
Yeah, exactly. And it's really easy and simple to break down.
Okay.
Like we're going to go through my ETF filter in a second, and that's going to have a lot of ETFs on it because I've been doing this for a while, and it, I've added things, right? But if you were to track this in the simplest, effective way,
I want the most effective, but I don't want to miss anything, but I want the most effective minimum work I can do.
Yeah, exactly. Then I would just look at these ETFs that are on the screen right
Okay.
here, and take a screenshot, write them down. But this is a very robust way to do it. Okay, so on the left we have our offensive sectors that signal risk on. So that's growth stuff. It's technology, consumer discretionary, like the stuff you buy when you have extra money. Semiconductors, which make parts for the technology. And then in the middle, we have the defense. This is risk off. So this is stuff like, consumer staples like cereal and toilet paper and stuff that we're going to buy anyway, right? Healthcare, we're going to buy that anyway. Volatility, right? Volatility is usually higher when the market is going lower, right? So these are all risk off type of situations. And then on the right, we have our thematic stuff. Okay, so this is more macro themed things that are going to be indicators based around whatever theme is happening in the market, right? So if like right now, for instance, if we think that the market doesn't like rising rates, this is the kind of stuff that's going to give us color on that, right? Like the market may not like a strong dollar. It may want TLT to be higher because that's some indication of rates. High yield bonds are typically more risky, and so they're going to sell off in a risk off environment, and they're going to rally in a risk on environment, things like that. And so one really simple way to look at this, Jeff, is just imagine that the market opens, right? And we open higher. Maybe there's a catalyst or a breakout, something to make us think that, okay, like the market's going to be strong today. And we develop this opening range, and we break out of the opening range to the upside, and we start to run, right? And now everybody's thinking, oh God, like I want to chase this. I'm going to wait for the pullback. And you can just tell that there's FOMO out there. And you look at your ETF filter and you see that it's like toilet paper companies that are leading this rally.
Like XLP.
Yeah, exactly.
Okay.
Like XLP, healthcare, and then you look in the semiconductors, like they can't get out of their own way, right? And they're super heavy.
So they're trading to the downside or not trading up as much as maybe the consumer staples or the healthcare name, XLP or XLV.
Yeah, and so I mean that's going to give you some information that most other people don't have. Like everyone else is just staring at SPY, looking at the tape, experiencing FOMO, and you're watching a situation where you're saying to yourself, you know what, like this rally is likely to fail. Like it doesn't have the risk on tone that I really want to see for continuation.
And can you see something defined enough if I just look at the dollar? If I have a strong dollar, what can I expect equities to do?
Well, in this kind of environment, typically equities have not liked a strong dollar. Okay, so we've had some days that are very thematic. Okay, so we've had days where the dollar breaks out, right? And TLT is selling off, which means that rates are going higher. Okay, that's a situation where, like, lately, at least over the past year, has not been good for stocks. So if we're seeing that and we're seeing maybe like some weakness in the morning, but we're not really sure, that's something that could really color the day for us. It could let us know, okay, you know what, like the weakness that I'm seeing on the tape, like I believe it a little bit more now. Like I can trust it because yeah, this whole thematic landscape right now is not good for stocks, at least for today.
Or I could put on more risk if I wanted to the short side.
Exactly.
Okay.
Yeah, if you're seeing the short, 100%.
Okay.
So here's my ETF filter. So on the right is the whole thing, and then we can kind of zoom in.
It's a huge filter.
Yeah, I mean, it's, I have like the self-driving car ETF, and this is also a way for me to watch like everything and just.
So you use this for more than just what we're using it for today, which is why you created that more simplified, but concretely important version.
Exactly.
Okay.
Like I do have stuff that's in bold that are, say, like the market sectors, and so there's a way for me to look at it and see instantly like what we're talking about.
Yep.
But also, look, I mean, there was a trend day that we actually just showed in a previous slide that was an uptrend day that I traded, and it was a tremendous risk-on atmosphere with incredible internals, and I looked, and what was leading the market? It was ARK. It was all the ARK stuff, right? And so one thing that
the Cathie Wood Innovation or Growth Fund or whatever it is.
Yeah,
but basically, high growth companies.
Yeah,
we're leading.
Okay. Yeah, and so like one thing you can do is say, well, not only is this risk on, but also like ARK is leading the market. Like maybe I can buy ARK as well, right? Okay. So just simple stuff like that. But if we just look at my ETF filter, this is how I built it. Okay, so it's a basket of ETFs. So it's chosen by me. All the ETFs in there are put in there by me. I can sort it by RVOL, and that's so that I can see what's in play. Like, right, so everything that's doing the most volume, right? So anything that's in a color.
And
like
RVOL is relative volume. So it's relative to that same volume that stock trades over like a 14-day period, 21-day period, something like that.
Yeah, with ours, it's like something like that.
Okay. So, but it's the volume that it's trading today relative to the volume that it traded in prior days.
Yep.
Okay.
And I also have it sorted from percent change from the open. Okay. And so this is not to be confused with percent change for the day, meaning from the previous close. This is from the open. And the reason I do this is because I want to see what's getting bought or sold today. Like as soon as the bell rings, right? We might have a big gap down, but I want to see like, what are they buying? Like once the volume comes into the market against that opening print. Okay. And then I also
because that's when we have the liquidity. After the open is when the most liquidity is present, especially for equities.
Yeah.
Okay.
Yeah. And if we're trading intraday, that's kind of when intraday starts, right? So like even if we gap down and we're going to bounce or something, like I want to be able to see, what's strong, right? And the absolute change from the open, that's the other way I can sort it. And the reason I do that is so that I can see what's moving the most. And so that's just going to give me anything that's moving the most, regardless of whether it's up or down. And so if you look at my filter, anything that has a green background is up from the open, and anything that has a red background is down from the open. And then if the ETF is in a color, that just means it's doing some RVOL. So that's kind of the color coding there. So we're just going to use this day as an example, and this was actually a few weeks ago, and when I was putting this together, and I kind of saw a weekday, and things look pretty organized on the filter. So I figured I would just take some snapshots to show you guys what I mean, right? So this was a downtrend day. It wasn't a tremendously explosive downtrend day, but it was a downtrend day, very weak day, a day that you didn't want to be long at all, and you definitely wanted to be short. So this is my ETF filter sorted by RVOL. So when I see this, I can just see at a glance immediately that high yield bonds are getting sold. So that's HYG, J, and K. Volatility is getting bought, and rates are probably higher because TLT is getting sold. Okay, and so these are just the things in play. And so what this is telling me is that this might be a day where the rates are kind of a story, right? And that might be holding the market down. But in the end of the day, like I don't have to know any of that. Like I don't have to be a genius. All I know is that this is risk off, right? This is like, you probably want to be short. Okay, so here's HYG, very weak. UVXY, volatility, very strong. TLT was weak. All right, so if we sort it by percent down from the open, we get to see the stuff that's getting crushed the most. And so I just see immediately it's growth stocks, right? We talked about ARK. The ARK stuff is down the most from the open. Crypto is getting sold, which is also tends to be a risk appetite asset class. And then consumer discretionary is getting sold. So this is further supporting the risk off environment, right? So we have ARK, XLY, crypto. Okay.
But I noticed those aren't getting sold at the same way that the market's getting sold. So that's telling me maybe there's the opportunity on a day like today is more in the market itself and trading the information that's presented through these themes that we've identified, through these indicators that we've identified. Because unlike most days I won't trade the market. But on a day like this, as I'm looking at the charts of the different ETFs even, I see the cleaner move is in the market than it is in the ETFs for the most part. So I can kind of hypothesize potentially the cleaner move might actually be in the market than it would even be in the stocks. So if I identify a downtrend day or an uptrend day, I may want to figure out which market vehicle, whether it's SPY, Q, IWM, or maybe some of the other ETFs, I really want to focus on, because you're telling me those are going to be the cleanest trenders, correct?
Yeah.
Okay.
Yeah, and it's really interesting to point that out, just because on massive trend days, like, things do tend to be more correlated, right? So if all of these risk on offensive sectors are all like downtrending together, then that's going to support a very clean downtrending market.
Okay.
So sorted by percent up from the open, we just see, volatility is the strongest thing. Consumer staples, right? We talked about like paper towels and toilet papers and, stuff like that. Like that's what's strong today, right? The dollar, we talked about how this market hasn't liked a strong dollar. And healthcare, which is down, but it's also the third strongest sector in spider sector in SPY, right? So the way I would look at that is, okay, it's relatively strong. Okay, so here's our consumer staples, dollar, healthcare. All right, absolute percent change. So this is the stuff that's moving the most. And just really simply, what it's telling me is volatility is the only thing that's up a lot. That's it, right? And so most other things are to the downside.
And is that giving you a true measure of the relative move? So, if I look at what's moving the most on the day, either up or down, I see ARKG, I see XBI, which is what the biotechs. So, it's down 3%, more than 3%. So that would mean kind of people are selling the biotech. So I get what you're doing with that, where you're essentially looking for what's moving the most. I don't care about the direction, but I want to understand what's moving the most and then prioritizing it that way.
Yeah, and okay. It kind of it lets me see what's up and down at the same time as well. Since my list is so long, I don't have to look at both ends,
Maybe get a shorter list.
Yeah, thanks. Yeah.
Okay. So now I really appreciate the context you've set for us. We've tracked the market internals, which really, as we looked at them, and especially that pyramid, it kind of opened up that huge potential for a trend day. And now I understand what you're saying, because we've confirmed that sentiment with that ETF filter. So not only do I have a really good sense that this is a trending day, either up or down, depending on what the internals say, and then I've identified potentially what kind of trending day it could be based on that ETF filter and which participants are leading us either higher or leading us lower. So I've got to be able to put risk on now, right? I can just lay in, I've got everything I need, let's do it.
Yes, great. We have the context, all right? We already have edge in this trade, but we need to apply the final piece of the puzzle. We want to confirm the strength or weakness that we expect to see now, right? Because none of this matters if if price is not confirming what we see. None of this matters, right? Because that's what we're trading. We're trading price, right? So we want to assess the price action. And so there are key spots where we can do this early on, right? So just like these other things, how they have patterns and rules, well, so does price action. So within these key spots, we can also find some great trades.
So what you're telling me here with these key spots is, so even if I have the checks in my favor from the internals and the checks in my favor from the ETFs and the type of participation there, I'm still coming down to the price action. And armed with this tool, I can not only put on a good trade, but I can make an even better trading decision based on the price action that's presented, right?
Yes.
Okay.
Yeah, because we're looking for risk reward, and this is where we're going to find it.
So it might tell me if I have, is this a normal like 3-to-1 risk reward day, or is this something where I've got a probability of looking for a 5-to-1 or a 7-to-1 or a 10-to-1 or something like that?
Yeah.
Okay.
And also, the price action is going to tell us who's in control of the market.
Okay.
So like, not only are we looking for trade and good risk reward, but we're also looking at the price action for evidence of strength or weakness, because there are very key checkpoints and levels that we're looking for price to clear and hold in order to show, okay, like this is what happens on a trend day. Like if it can't do this, in other words, this is a huge red flag.
If it can't do that.
Yes.
So if we have all these checks and price still can't do something, that's going to tell me to really either reduce my exposure, reduce my risk, or just wait and put on risk after it happens, right?
Yeah.
Okay.
Yeah. We're always
so it's really a good safety guard for us because we have all the reasons why this should work. But if we don't have the price action confirming that, we really don't have the same opportunity that we think we do, right?
Yeah, we're always looking for red flags.
Okay.
And that's going to help us gain confidence in the trade when those things are not happening, right? So price action basics, okay? Key levels, right? A lot of these are just based on key levels, which is very simple.
By key levels, you mean support and resistance levels?
Well, yeah, but they're more specific than that.
Okay.
And we'll go over that very, very soon. Early price action, right? We want to capture this day as early as we can, right? And it doesn't mean you need to rush it. It doesn't mean you need to take it like before you're ready, but we want to be looking at all the checkpoints that are coming early in the day so that we can capture this as early as possible. So there's a simple sequence that happens, okay? And so we'll go over it, right? So these are the key moments, right? So you asked about price levels. Well, these are our price levels, okay? The previous day's range, a lot of the time we're not even dealing with this because there's a gap. Gap meaning outside of previous day's range. But we ideally want to be outside of previous day's range. And if we open near it, we want to be breaking that and holding outside of it early in the day. If it can't do that early in the day, then that's a big red flag.
Because what we're talking about is the range from yesterday can act as support or resistance. And if it breaks above that resistance level, that high from yesterday, and then maybe comes back in, that should act as support, is what you're saying.
Yeah.
Okay. And same thing to the downside. If we break below the support level from the prior day, that should then act as resistance.
Yeah.
Okay.
Yeah. We should take that out. We should be making lower lows and lower highs. And if you think about Linda's definition of a trend day, it's range expansion, right? And that early price action should make just 10% of the day. So if we're having a tough time getting outside of that early range, I mean, what are the, we know what should happen, right? So another place to key in on, and this is when we have a catalyst, right? A catalyst in the morning, like a CPI report, okay? So say at 8:30 we have a CPI and the market sells off. We're going to look at that initial reaction low as a key level. And by initial reaction, I mean that first reaction that the algos are hitting the tape and we get that huge volume and that huge spike down. If we can't take that initial reaction low out early on in the day, if not in the pre-market, then again, like we need to raise a red flag and ask ourselves, like, how much does this catalyst really matter? Because if it really matters and if those larger participants are going to step into the market today, that's not going to be it. It's just that algo spike that's not the whole thing, right? That should just be the beginning. Overnight or pre-market high or low. Okay, so similar idea, right? Whatever the range is in the pre-market, and then the opening range, right? So the range that we set early in the day. And this is one of my favorite things to look at for trades, right? Because if we have an opening range, and if we have all the checks in our favor, we might have enough time within that opening range to get all our checks in our favor. And then we can make a trade based on that opening range with a very good stop and give ourselves an opportunity to capture this trend day.
So you might see in the first 20 minutes, our vol D is extreme, our ADD line is pinned, and our ticks are all, say, above 0, and we get a couple plus 1,000 ticks maybe, but the price is still within that opening range. You could then look for that opening range break as confirmation of that trending move to the upside.
Yeah.
Okay.
And better yet, we're outside previous day's range. We've already taken out the reaction low, stuff like that.
Okay.
Now we're looking at the opening range. Okay. And then pullbacks, we touched on those when we were talking about the tick and VWAP, which we talked about in the beginning, right? Those are, we want to see shallow pullbacks. Like in an uptrend, we want to see the pullbacks get bought right back up. In an uptrend, we want to see price hold VWAP generally the whole day. And then there's the morning high or low. Okay, and this is mainly something to key in on for the afternoon close, because in these trades, there's often two legs, right? There's the morning leg, and then there's some digestion in the afternoon, and then there's a leg into the close. And a lot of these days will close at the other end of the extreme. So if it's an uptrend, it'll close at the highs. If it's a downtrend, it'll close at the lows. And so in order to tee up that trade, we need to be paying attention to that morning high or morning low. Okay, so we'll go over these. This is the initial reaction high that I was talking about. Okay, so we've already gapped above yesterday's high. A CPI came out at 8:30, and the algos blasted the market up to where that first arrow is. So that's my initial reaction high. So I need to see price take that out. If it can't and rolls over and that becomes resistance the whole day, it's not going to be a trend day. So on this day, it did take it out early. It took it out before the market opened. And so I love that, because now we actually have a chance at the open to get a retest of that level. And of course, as you guys know, at this point, I'm going to be watching the tick at that point. So this is actually what the market looked like at this point, just because I want to demonstrate to you like that this isn't just like all theory, like this is very applicable stuff that can help you make real trades like that I've made. And for this example, the fold ratio was +9, which is overwhelming. And this is at 9:48 a.m., so early. The advanced decline was in a range between 2,500 and 2,600. Tick is above 0. The cumulative tick had started an uptrend, right? Like, it's early. We want to see this stuff continue, but all these checks are in our favor. And if you looked at the ETF, the offense is leading, right? And I actually have an indicator that's on this screen. If you can see it down at the bottom, it's very small. It just says offense, and that just means offense is leading. If we zoom out, this is the day that we're talking about, and that yellow line is the level that we're keying in on, right? So
I really want to just buy it when I see that.
Yeah.
Where would I put my stop?
You put it at the low day, right?
You just put it at the low day. Yeah, that makes sense, because if we're seeing those strong metrics, we really shouldn't. That should be the low. We really shouldn't go any lower.
Yeah. And if we go back to this slide, which is where we're talking about, we come in and we retest that reaction and VWAP, right? We're coming right back into VWAP, a key level. We have all of those things in our favor. And at this point, if you're looking at this, like it's very easy to look at it and say, man, it's like up a lot, right? It's like, it's kind of extended. Like, do I really want to be buying this? And that's why it's important to look at these charts, because now we can see that it absolutely was not up too much at that point. So here's the next checkpoint. And the pre-market high in this case happened to be the same thing as the opening range, pretty much because we opened at the pre-market high, right? So we had that pull in that got bought right at VWAP, and at the reaction high, and then we came out and we took out that opening range. And then again, we come back into it later in the day where that second arrow is.
So for this trade, if I bought that, say I'm looking at this and I'm like, okay, we're back into that opening range. That lines up with the pre-market high. Yep. Okay. Now I can buy after we see some buying pressure come in here, or after that reversal happens, right? We get that pull in right to that support level. And I start to see that change a little bit. And I want to buy there. Where would I place a stop for that trade?
So one place you can do it is just below that low that you traded off of.
Okay.
You can do that, right? It depends what kind of trader you are.
Because if we're trending, we should make a series of higher highs and higher lows.
Yep.
Which would mean that I am just buying against the first higher low that I've seen.
Yep.
So I'm essentially making that trade looking for the trend day to continue. Okay.
Yeah. And I'm willing to give it like a few shots too. If all of those checks stay in our favor, that's what's going to give me the cue that, okay, like it's worth a couple tries, right? Like if I don't get the price action exactly right the first time and I get shaken out, like I'll get back in, right? And I might do something like trade equity that way, and then I might go buy some calls that I'm not going to get shaken out of, that I might be trading against the low a day, that kind of stuff.
Okay.
And then, again, just to confirm, we have all these checks in our favor still, right? They haven't changed. In fact, if you look, offense has increased its lead. So it's even better now. So again, that's the level we're looking at, just to give some perspective. And here are all the pullbacks of the day. So,
well, it really only looks like we have two pullbacks.
Yeah, on a higher time frame, it's kind of like
those are really muted pullbacks. I mean, you're calling them pullbacks, but those aren't really pullbacks at all.
Well, this is a 2-minute chart.
Yeah.
So they're micro pullbacks.
They're micro pullbacks. Yeah. Okay, that's fine.
But yeah, I mean, even with this, they're all higher than the previous one, right?
Yep.
And so we're getting that kind of price action that we see, right? Like once it gets to be like 11:30, like we shouldn't roll over and like take out the low. Like that's not what happens on a trend day. Now, I'm not saying that can't happen. I'm just saying that's not a trend day, right?
But if we have enough checks in our favor already, and that's really what we do well on our desk, is we identify which checks should be present for us to have a good trade. And it doesn't mean we're always right when we put the trade on. We put it on and we manage our risk. But when we have enough checks in our favor, we put the trade on with the expectation that the trade is going to work well. This is a great example that I'm seeing of, okay, we get that first trade. Okay, we put some risk on. Okay, we get that second trade. Okay, we can put more risk on. They're probably different trades. The first one is stop low of day. The second one is stop just below that pre-market high opening range. But we get these opportunities to put risk on because there are enough checks in our favor that the trade is going to work out. We put on enough risk that if it works, we're going to get a really nice chunk of change. But we don't put on too much that if it doesn't work, we're just going to be in a total state of disarray.
Yeah, we're gonna have a system for this. So we're gonna actually have risk for a trend day. So we're gonna know ahead of time, this is what I should be doing on a trend day. And look, I mean, in this case, the checks in our favor are overwhelming. Yeah. So we shouldn't be second guessing ourselves at all in this trade. But we can put on the risk and we can manage it, of course, because even if it doesn't work, then we'll be stopped out, and that's okay. It'll give us some more information. But we don't have to put on a ton of risk. We want to put on the right amount because it looks like this trade is just going to work for us to such an extreme way that even a small amount or a normal amount of risk can yield tremendous results if we just let it work for us. Yeah. And that's actually a really good point, because I've found that it's much more important to recognize these properly and trade them properly than it is to worry about an overwhelming amount of risk, right? Because you don't want to shake yourself out on a day like this, because then when you look back, there was no reason to get shaken out, right? So you want to be able to withstand the pullbacks. If you're trying to hold, if that's your plan, then you want to size so that you're able to sit through those little micro pullbacks that we talk about.
In order to get that insane risk reward that in this case seems to happen towards the end of the day.
Yeah, in real time, those seem bigger than they are on the chart, and your P&L is moving a lot, and you know what, like you can also actively trade it within that context, right? So you can, it goes up, you think it's gone up too much in a short amount of time, like you can take some off with the idea that you're going to like buy some back on the next pullback. And that's sort of an advanced way to trade it. You certainly don't have to do that, but
I see those two distinct spots. And in each case, using the internals, I'm thinking I'm either going to get stopped out on this trade or something significant is going to have to tell me that I have a reason to sell. A reason to sell meaning what's my reason for exiting the trade profitably? And when I have all those checks in my favor that we laid out with the market internals, with kind of those indicators, and then also the ETF filters, if I have all those checks in my favor, my reason to sell might be it's the end of day. Okay.
And here's the morning high. And so this is what I was talking about. This becomes a key level if we're going to get that move into the close.
Oh, so I have another trade to put on now.
Oh, yeah.
If we get above the AM high into the afternoon and our internals are still really strong, the indicators you gave us, that vol-D ratio is even stronger now, it looks like. The advanced decline line's even bigger. The tick is holding still above the zero line. The cumulative tick is still in that uptrend. And the offensive stocks are still increasing the lead. Okay, so now I can put on even another trade.
Absolutely.
Okay. Where would my stop be for that trade?
So this is a question that like I get all the time, right? Because I don't think there's one answer for this. It depends what kind of trader you are.
Okay.
But for me, this is going to be a different trade than the other ones,
yep.
Right? The other ones are early in the day. That's when I'm playing the whole trend. So I'm going to be trading against the low. With this one, like time's running out. Like we don't have enough time for this to trade all the way back to the low and then come up and close at the highs, right? So I want this to go now, right? So whatever consolidation it's been in for that last like 30 minutes to an hour there, I'm going to put it somewhere below there.
Okay. So you're expecting it to make a move and close high of day based on this information alone.
Yep.
Okay.
All right, so here we go. This is just a little summary just so everyone can sort of take a deep breath and refresh and look at these and remember how simple it is. But market internals show us the potential for the trend. The ETFs give us the tone, the risk appetite, and then the price action is telling us that all of this stuff is true, right? And that we can make trades. Now, there are a few different things that we can trade on these days. Here's some trading vehicles. I don't know what you think about this, Jeff. Like, what do you trade?
So a lot of times, when I've gotten involved in trending days, I typically look at Q, like QQQ. A lot of the trading I make is shorter term. It's more scalp based, but I have gotten much better at recognizing, I learned from my first experience of when I fought that stupid trend day all day. I was fighting it all day long. And just like at the end of the day, just felt like I got run over time and time again. I was wiped out that day. And so now I've learned from that and gotten a little bit better. And so a lot of times, I'll trade either SPY or QQQ as a primary vehicle and then look to use options similar to the way you have. I'll put on my options as early in the day as possible because that kind of gives me my upside. A lot of times I'll look for maybe risk 50% of the premium of the options that I put on and either zero DTE if I really have a lot of conviction, if I have a lot of those checks in my favor, I'll put on those options that expire that day. But if I don't, if I'm still feeling it out a little bit, I want to avoid that premium decay that happens so quickly in zero DTE options. So I'll put on weeklies or even go out one more week if I don't have as many checks in my favor as we've seen it that you can have. I know a lot of traders on desk though, especially some of the more developing traders like to trade some of the lower price products and we really encourage them to do them. So sometimes they'll trade like TQQQ. It's a levered ETF, so you kind of have to watch out a little bit because it can move a little bit funky. But for the purposes of this trade, it can trend so much more cleanly when it really gets going. And same thing with SPXL or SPXU. So those are really, really good vehicles that you can trade. For the futures traders on the desk, sometimes they'll trade the NQs or the ES. And then for the micro futures, you could trade the MNQ or the MES as well. The beauty of these is when we have all of these factors and when we have all these checks in our favor, this list we're looking at becomes my list of in-play stocks. Maybe I'll trade something with an independent catalyst or something relatively stronger or relatively weaker. But for the most part, if I can identify a trend day, I'm thinking the cleanest and the best risk reward is going to come from something on this list. So I'll be looking at this list and either trading Qs or some of the products and then some options, or SPY and some of the products there and then some options. It really kind of is a great place to start. And maybe there's something that you want to build out with this, but this is really, I think, the most encompassing look of different products that you could trade.
Yeah, it's great. And then from there, you can go to, volatility. Maybe you think that, IWM, the Russell is stronger or weaker than everything else. And maybe if you're focused on NASDAQ, eventually maybe you start getting into trading high beta names based on all this information on these days. Like, those are all viable options, but this is where I would start. And I actually don't think that sometimes it doesn't get better than this, right? You're just focusing on the simple thing of like, let me capture this trend. And you're actually focusing on all the stuff we covered in this course rather than worrying about, trading X, Y, or Z.
And if I'm buying options, I am always thinking about the premium that I pay for them. And I'm always very careful to size appropriately. And I'm often looking for the max convexity that I can get in the options. So this is different than any other day. A lot of the times, and so many people will tell you, selling options premium is the way to make consistent profits. And that's true in a lot of cases. Trend days are a very unique circumstance. We talked about it, 10 to 20% of all days are trending days. Okay, so we're talking about that 20% that you can make 80% of your year on. That 20% of days that if you understand how to set the context right, you can make 80% of your P&L for the entire year on those days. So when it comes to options, I'm very careful about the strikes that I'm selecting because I want to maximize convexity. Convexity meaning the upside that I could get if the move really starts to go in my favor. So a lot of times I'm looking for like a 20 delta, which seems absurd because a lot of times I'm looking at the price and I'm thinking, oh man, that's like way out there. But that's really kind of a general rule of thumb for this. And I'm really typically willing to risk about 50% of the P&L that I paid for it, not anymore. So I'm not usually buying these and saying it's a zero or it's a home run. I'm still protecting myself a little bit, but I am always looking for that maximum convexity. That's the opportunity that options provide on a day like today.
Great. Do you want to go over some trades that we've made?
Yeah.
Okay, cool. So here's a trend day, and here's an opening range, and here's an opening range break, and you can short the break and you can put the stop above the high. It's as simple as that, right? You might watch that pullback into VWAP there and look at the tape and the tick and the chart, draw a trend line, and you can get in earlier than that. But there's nothing wrong with shorting that break when all of these checks are in our favor. Okay.
And that might be the spot where you're like, okay, I have all the checks in my favor. I'm buying my options here. I'm shorting the market here. I'm buying one of the inverse ETFs here. And my stop is going at a defined risk place. We're talking about that being about 10% of the total move on the day. I don't really know how much it was, but looking at that, it was a very small percentage of the range that it traded on the entire day.
And so moving on, we've got a similar trade, similar opening range when it gets back above VWAP. Right, there was a pull in at the open, and then we bounced and we broke the opening range, and then we come back and retest VWAP, right? And so there's another spot that I'd be looking for.
So once we get that pull in towards VWAP and that retest, It looks like we try and do it once before, and maybe I even put some risk on there. I see what you're saying about you could get stopped out, so you do have to be careful. Maybe my stop was just below that first low, and I got stopped out, but then immediately you can see the change of character. It just rebids almost immediately, and you can take that second trade. Again, stop just below that if you want to. And that's really, I guess, where we would look for our good opportunity. And then reasons to sell would really only be if we get a really huge overextension to the upside, or kind of end of day, unless something changes on the internals.
Yeah, and the reason why everything that we just went over in this course is so important is that when all of that stuff is aligned, like that's going to just officially give me the license to give it 2 tries, right? Like I'm okay with that because I know what the potential is. Like I know what the reward is going to be if this works. And so that I think is often like not thought about enough with trading, right? Like we always think that like everything's like binary, like this is what you're supposed to do. You're only supposed to give it 1 try or 2 tries and you're supposed to trade it against here. Well, trading can be messy, right? And this is why context is so important, because when we have this powerful context behind us, then we can systematically go in and trade it with the knowledge that this can be a trend day. And so therefore, okay, I'm going to give this another shot, right? That's my rule. So here's another one. Another opening range break. So we get the break, stop against the high, and we get a retest really fast. It looks like you had to be really fast on that one. I traded this day, and this had a fantastic afternoon trade.
How'd you feel when that retest happened?
Oh, those are horrible on the tape. Okay. They look brutal, which again is another reason why all of this is so important. Because when I have these checks in my favor, I'm less likely to get faked out by something on the tape. Right.
Something in a 1 minute chart or a 2 minute chart, it just doesn't mean as much when you have all the internals supporting everything you're seeing.
Yeah.
Okay.
Absolutely. And then we get that break into the afternoon. Okay. And so there was a tick moment at that high. There was a key high tick, right? There was a great signal to be looking at a short. And then we break the trend line. So that's some more confirmation. You can short it there. Or you can wait for the break. And if I'm going to wait for the break, I'm going to have a tighter stop.
A tighter stop. Okay. So you wouldn't put your stop above the high there. You would actually put your stop just above maybe halfway or a third of the range.
Yeah. Like if I see it hold for a while somewhere lower, like I might put it there. But I want to see like when that breaks, again, like the clock is running, the time's running out. It's the end of the day.
So you want to see that momentum come in, and you want to see it drive it lower.
Yeah, this becomes a bit more of a momentum trade.
Okay.
So, you could be a momentum trader and just trade in the direction of trend on these days and clean up, right? You don't have to be a position swing trader. You can just be trading all these little momentum moves, right? We see a couple in the morning, like there's that one out of the opening range, bam, you can cover, and then wait for the next one, hit the break, get a really clean down move, cover again, and then wait for the one in the afternoon to set up. Like that's a perfectly viable way to trade. All right, so this is actually the day we covered in the price action section, right? So you should recognize a lot of these, okay? And this is, I think this is actually SPY, and we were looking at Qs before, but the same thing remains, right? We have that pull in at the open. We break the opening range. There's a trade against the low, right? We come in and retest. We didn't even highlight that here on the sheet, but we come in and retest. And then later in the day, we get that bigger pullback into VWAP where we can watch that, right? And then we get that break above the morning high.
But we have distinct higher highs and distinct higher lows at each point of the day. Okay. So overall, this information just has incredible edge behind it. So one thing we do on our desk that really we encourage every trader to do is to take these tools home with you. So the things that we talked about today, make sure you have them up, start tracking them, and start looking at them every day, and especially pay attention to them on these extreme days. If you do that, it's actually really powerful and amazing how quickly you'll start to recognize what an extreme tick looks like, what an extreme ADD looks like, what that extreme vol D looks like. Your recognition, your pattern recognition will get faster and faster and faster. We can drill down further into the various ways to trade a trend day, or, really the different ways that a trend day that can present itself. But for now, this mini course tells you everything you need to know about how to identify that trade, how to identify the opportunity as it's being presented to you, and how some very basic ways of how you could execute on a trending day.
Great. And if you guys want to hear more about these trend days, more specific things about them, if you have questions about them, just put them in the comments below, and we'll think about other videos based on your comments, and we'll answer any questions that you guys might have.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of the laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with S&B to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.